As promised yesterday, since Bitcoin closed the daily candle over $72,000, two candles in a row, I decided to, just now, I added to my longs over on LoveX, which you can actually track live. If you go to the description of today's
Crypto
video,
Kids, welcome.
it's going to be the first link in the description down below, LoveX. You can sign up with this link for free. Search Crypto Kid at the top toolbar, and you can see those trades live. So go to LoveX, sign up. Completely free to do so. But I need to exercise, again, once more caution. I don't want to be overly excited about anything at the moment. I do see Bitcoin potentially going into 84. Like you guys know, Ben Cowan did an interesting tweet, which I wanted to share earlier on this morning. He stated that if you go to 2022, when the Russia-Ukraine war began, this was February 2022, Bitcoin before that created a capitulation candle. As we can see, if we go to weekly, previous cycle, Bitcoin had an initial capitulation. The low was in at 32K. Then, when the geopolitical conflict began, Bitcoin created a second low, which was higher than the initial low. Bitcoin has done the same here. Geopolitical conflict began, you established a second low, which was higher than the initial low. In the last cycle, Bitcoin went to the bull and bear market support bands, following that second low created, swiped the liquidity, and continued to the downside. Now, Ben Cowan sees a similar thing taking place, given how we've also broken above the swing high, which is what Bitcoin did pre-retesting the bull and bear market support bands. Now, I have two Satoshis to comment on this. Look, we are in a bear flag. Bitcoin is in a bear flag, and it is in a bearish downtrend. Bitcoin has a bear flag on the 4-hourly time frame, also identifiable on the daily time frame. With a bear flag, we're in a bearish trend. So I'm not rushing into any sort of big positionings. However, like you know, we've broken above 72K. So the bullish expectations has slightly increased. For me, to see 84K solidified, I need to get this one you've not seen before. We explored together over on the Moonshow channel. I want to see Bitcoin make its way over the parabolic SARS downtrend. The resistance sits at $76,000. Good news, we've broken above the EMA ribbon's uppermost resistance line on the daily time frame. So that's some good news. But ideally, you got to break above. This was a horizontal channel. Now it's become a slanted channel. Its resistance also sits at $76,000. The Bollinger Bands too. So the next line, the bullish probabilities have increased, but you got to get over that 75, 76 mark to make 84K even more probable. I'm leaning a slightly bit more to the bullish side than I did before. Hence, I added a little bit to my long positionings. But regardless of what takes place within the upcoming few days, remember we have FOMC2, which I will jump into. Regardless of what takes place, whether if Bitcoin wants to get rejected here or if it wants to go to the bull and bear market support band, ultimately I see rejection. And this has been the concept that we've discussed, I think, for many months. It feels like at least many months here on the show. It is a move to 84K and then a rejection. Why do you say, Crypto Kid? Well, I'm a believer in macro analysis. I believe in the importance of macro TA. I think macro is ultimately the most important bit of TA that we can conduct, and the shorter time frames are cool for finding entries, but the macro is what tells the story. And in the macro, the trend is clearly bearish. I mean, we're in a downtrend. In an uptrend, the probabilities of continuing higher are obviously more, right? It's obvious. You're in a bullish trend. But as soon as the trend changes, then continuing lower becomes the more probable outcome. And at the end of the day, we're only looking for probabilities. That is the game of technical analysis. At 84, you have the resistance from the EMA ribbons. The EMA ribbons held up Bitcoin beautifully throughout the entirety of the bull market. And I do see the EMA ribbons holding the entirety of the bear market too. Could I be wrong? I can be. But I think it is a justifiable prediction to be making. In the cycle, not in the past cycle, but in the cycle before, you also got rejected at the EMA ribbons multiple times, just like how you got rejected at the bull and bear market support band, which is also showing resistance at 84K. Then one of my favorite moving averages on the daily time frame, the 128 simple moving average, also shows resistance at at the $84,000 territory. We have a CME gap at $84,000, and simply from a price structure point of view too, 84K is critical. Look, we will just put the following line, and you will see that the prices bounced around 84 between February to April before seeing a continued rally. This was the mid-cycle bear market. You saw a touch upon 84K with the initial capitulation after the October conundrum. So from a pricing perspective too, it's rather quite important to go to the prior cycle. In the prior cycle, when we had the mid-cycle bear markets, Bitcoin rallied into those prices and got the rejection from there, which would correspond with Bitcoin hitting the 81, 82, 83, 84. So for me, I'm a little bit more bullish in the short term, but ultimately I see a rejection from those $80,000 territories. Michael Saylor, let's brighten the mood a little bit. Michael Saylor bought via STRC 3.5 times the Bitcoin supply issued over the month of March. So in the past 17 days, via STRC, Bitcoin was accumulated via strategy more than around 3.5 times the supply that was the Bitcoin that was added to the supply within the month of March. And there simply isn't enough Bitcoin for everyone. I don't know if Saylor will be able to do this forever. My gut instinct says, because I'm a Bitcoin believer, that he will be able to do it for a very long time. And it's simple supply and demand. If you have a lot of demand but not enough supply, prices go up. I'm a Bitcoin long-term hodler. I'm a believer that every single capital piece of dollar fiat-based capital will be absorbed eventually by Bitcoin. So this makes me quite happy when I think of 20 years and then into my retirement and my acting career. I can fund a lot of it with the Bitcoin that hopefully, I can continue to hodl and continue to accumulate at a young age. And maybe you're not young, and that's fine also, but you can do it for your kids, and your kids can learn it and create it as a habit, and they will be having a Bitcoin-powered retirement account potentially that can allow them to follow their dreams earlier on, which is the ultimate goal. At least that's how I see things. Things could be worse. Bitcoin is at least back to where it was 2 years ago. We could be down 50% compared to where we were 2 years ago. So I don't think it's that bad. It's the best bear market ever, according to data. We're currently outperforming previous bear markets. So we're doing fine. At least that's another perspective too. And in 24 hours time, we have the Federal Reserve meeting. The current projection is that they will not be cutting rates, not just in March, but also in April, also in June, also in July. And what's completely unbelievable is in the June meeting, we were expecting a rate cut by 50 basis points. So we've shifted from a probability of having a 50 basis point cut to the most probable outcome being 25 basis points with Fed Chair Powell gone, to a 77% chance that they will not be cutting rates at all, with a 90 basis point chance that in June, they will be hiking the rates. Now there is a probability that they may be hiking the rates. That is ridiculous. That is absolutely unbelievable. And I'm actually going to take a screenshot of this because I've not seen this before. I just refreshed the CME Fed Group page, and as a result of it, we were able to see that there's actually a possibility that the Fed may hike interest rates, even going into the June data. It's simple. I don't think that the Fed should be reducing rates. 2 weeks ago, if you were to have asked me and said, hey, Crypto Kid, do you think the Fed should be cutting rates? I would have looked at the fiscal policy and pointed out that due to the fiscal policy creating a demand for hundreds of billions of dollars of interest payment on the US national debt that is soon to hit 40 trillion, It makes sense that since inflation has come down to the near 2% levels, the employment market is facing some elevated risks, they should be cutting rates to ease off the fiscal policy. But that perspective changes 180 degrees following the current ongoing geopolitical conflict. Even Trueflation, the third-party data aggregator that was calling for rates to be cut more so than anyone, pointing out that inflation was below the 1% level and that risks to deflation were very high, they have now admitted themselves that inflation, PCE, personal consumption, which is the most important inflation metric that the Fed looks at, has seen a phenomenal increase to the upside. Over just 2 weeks, it has went up by 1 whole percentage point, and we're currently seeing at 2.37%. This is the Trueflation data. This is blockchain based. This is a third party who have a subjectivity. According to their Twitter page, they have a bias of wanting the rates to be cut. And even they have admitted that inflation has increased. So with these numbers, getting a cut is very, very complicated. Energy prices have seen a tremendous increase. You can see that the prices of energy have a very on par correlation with CPI data. You can see that in the Russia-Ukraine war situation, the prices of crude oil stayed at around $100 for 120 days. Inflation caught up. There was a divergence between the two. And as soon as the Fed started to increase the rates, then the prices of crude oil fell. Then the prices of inflation fell. So you're getting a huge spike in crude oil pricing. Because this war began on the final days of February, the impact on inflation will be revealed in the month of in April. We're going to get the March data in April, and I think inflation is going to play catch up. So in this environment, how can you cut rates? The Trump administration wanted to reduce the national debt, but they're doing the single thing that will increase it the most, which is going into war. So how can you ask the Fed to be more lenient, and how can you ask them for help? It just simply doesn't make sense to me. And I think the general population have also come to the same understanding. A net 45% of investors expect higher global CPI in the next 12 months, up from just 9% a month ago. So a month ago, 9% of investors, according to the Bank of America, were expecting higher global CPI. Now that is 45%, up by over 30%. Insane. So things changed dramatically within the past 2 weeks since the beginning of escalating geopolitical conflict within the Middle East. Net 17% of investors expect lower short-term rates, the lowest since February 2023. 46% were looking to see lower interest rates within the short term. Look how the probability table just changed in a matter of minutes. It's ridiculous. So this isn't an environment where we will see Bitcoin euphoric all-time highs. You need rates to be low for super cycle type levels. For altcoins to do well, you need 0%, 1% interest rates. Doesn't mean that we may not see a small relief rally. Actually, I think Ethereum is looking like a great buy. We've been pointing out on numerous occasions that this line of support is a great one for Ethereum for the long term to be buying and accumulating. So congrats if you did your own due diligence and decided to go ahead with that. But yeah, it's just a time of patience and a time of continuing to keep at it, because soon, I can't tell you how soon, but soon we will be rewarded. I mean, just look at the traditional financial industry that crypto has been fighting against. The MasterCards, the big banks that were not interested and didn't want anything to do with cryptocurrency in the prior cycle have officially lost the battle, bent the knee, and are now incorporating and integrating crypto into their own company. MasterCard, which will eventually become non-relevant because nobody wants to give up, no merchant wants to give up 1.5 to 4.5% of the total amount of the product to a remittance company when you could just use cryptocurrency where there is no total percent of the transaction charged. It's only a stable-ish, very low figure, lower than a cent of fee when you look into things like Solana. So I think remittance companies will become ancient, and they've understood it. In the last cycle, we didn't have the same regulatory landscape that we do today. So instead of fighting against crypto, remittance companies, even JP Morgan, like Morgan Stanley, the banks that JP Morgan hated Bitcoin and crypto, look what happened. They're giving Bitcoin, Ethereum collateralized loans to their clients. Tables have turned, tables have flipped. So their MasterCard is announcing that they've entered into a new phase where they're doing digital assets, digital asset partnerships. And they even posted an entire article speaking about how the next phase of crypto will be about payments, not speculation. MasterCard feel threatened. In my opinion, that's why they're in the process of acquiring BVNK Finance, which is a leading stablecoin based payment infrastructure. They're trying to find ways to stay relevant and not lose revenue. But ultimately, the world will shift into Bitcoin. When they do, that will create a huge buying pressure that already exists without them, by the way, just because of Saylor and strategy. So imagine when we do see mass adoption and mass usage, how that's going to translate into price. 20 million Bitcoin have already been mined. There's 1 million Bitcoin that is left, and there's roughly about 110 years for which this Bitcoin to be mined. There's going to be a big supply shock. The world will naturally shift into Bitcoin. And when that happens, I think that's when it's going to be too late. But still, we have our opportunities. Yes, we draw our lines and we do our technical analysis, but we all know that this is a long-term macro game. And if we can be patient, then I think we will be highly rewarded. So that is it for me today. We're going to be streaming the FOMC like we always do over on the Moonshow channel. So stay tuned. If you're interested in trading the traditional financial markets and leverage the volatility there are some products available on BTCC, which you can check out using the second link in the description down below. Guys and girls, thank you so much for watching. Take care, and I'll see you all very soon. Bye-bye, guys.